Hey guys, my name is Thor. Welcome back to yet another video. Today we'll be talking about GMX.io because recently the GMX token has seen a major price rally, and this is probably the most hyped DeFi project and has been for the past few months actually. And so I want to give you guys a breakdown and investment analysis of the GMX token, whether there is more upside to this investment. Look at the data, look at the revenue that the protocol is generating, look at the PE ratio and some other statistics to get an idea of what we can expect here in the upcoming months, also in terms of upgrades. Furthermore, talk about the GLP token here as well, because this is probably one of the best ways to earn real fee generated yield with stablecoins, Ethereum and Bitcoin at the moment, and I'll give you guys a step-by-step guide. So let's dive into it. This shouldn't be a too complicated video, however it should be quite valuable. So make sure to like the video if you enjoyed it and found it valuable. Of course, subscribe to the channel if you haven't already. Now furthermore, I have actually created an article or a paper on GMX and the GLP token over on my Notion. This is also something that I will link down below in the description, so that if you're willing to go the extra mile, do some additional research, well, you can check that out for free essentially. And first and foremost, if you're unfamiliar with GMX, which I doubt many people are at this point, I mean, it's the most talked about DeFi protocol on Twitter. We have talked about this since March or April this year. It is essentially, however, as you can see, a decentralized perpetual exchange and trading platform. And if we go over and visit GMX, you can see this is where you are able to trade from 1 to 30x leverage. It is on the Arbitrum blockchain and over on Avalanche. In today's video, we'll be focusing on Arbitrum. You can see these are the different assets that you can trade and swap between, and this is a pretty user-friendly interface, and you're able to swap here. Now, the reason that I think GMX is so exciting is not really because it's a trading platform. I don't do much trading myself. However, first and foremost, I think they have a very interesting model in terms of how they attract liquidity to the protocol, something that also benefits us as liquidity providers to quite a high extent, because second, as this is a decentralized protocol that actually is doing quite well in terms of generating revenue, well, they are giving almost the entirety of this generated revenue to either holders of the GMX token or the GLP token. And that's what I think is really exciting and really beneficial for people like you and me. Now, I do trade once in a while, sometimes when I try to hedge some of my positions, and that takes place on GMX. And while this video is not sponsored or anything like that, I have created an affiliate link, which I'll leave down below in the comment section, down below in the description, where if you trade with that, first and foremost, you are supporting the channel because I get a small kickback from it, and at the same time, you're also getting a 10% discount on all of the fees when trading and swapping on GMX. So just some additional information. Now, let's look at the two tokens here on GMX, because there is the GMX token itself and there is GLP. And very quickly, the GMX token is the utility token. This is the volatile token that has seen such a large price increase the past couple of weeks, now sitting at around $50 at the time of creating this video. It is also the token that is used for governance. However, in contrast to a lot of other utility DeFi tokens, there is another purpose other than just governance to hold this, and that is that the GMX token accrues 30% of the fees generated on the platform for trading and swapping when you are staking your GMX token. So it is essentially like owning protocol equity. Buying GMX is betting on the protocol GMX and betting on future growth and adoption and a lot of generated revenue. Now, the GLP token, on the other hand, is quite unique, and this is the liquidity token on the protocol. Through GLP is how we as liquidity providers provide liquidity to the people who are trading and swapping on GMX.io. And GLP represents all of the tradable assets on this trading platform and accrues 70% of all of the fees generated from trading and from swaps here on GMX. And the price is further also connected to the P&L, the profit and loss of the traders, but we'll dive into all of these things now. So let's take another look on GLP. If I go over to the dashboard here on GMX.io, we can see the GLP token here. Its price is at around 91 cents at the moment, and it is made up of all of these different tradable assets on GMX, as I just said. So these are all of the assets on the Arbitrum side of GMX, and therefore the GLP token is made up of these different tokens. We can see that around 30% is Ethereum, 40% is USDC, 20% is Bitcoin, and so in total, around 50% of the GLP token is stablecoins, around 30% is Ethereum, around 20% is Bitcoin. So let's say that I hold $1,000 worth of GLP. Well, I am essentially holding $500 worth of stablecoins, $300 worth of Ethereum, and $200 worth of Bitcoin. And therefore, the price of the GLP token actually follows the price movements of Bitcoin and Ethereum, however to a lesser extent, because half of it is made up of stablecoins. I hope this makes somewhat sense. We can see the weight here. Right now, Ethereum is, as mentioned, 29%. They are aiming to have this at around 28%. So we have the weight versus the target weight that they are aiming at, the target weight that they have created, because they see, okay, well, we need around 28% for Ethereum because a lot of people are trading with Ethereum on our platform. And we can also see the utilization ratio. So currently, of the $82 million worth of Ethereum in the GLP pool, well, 24% is being utilized. The great thing with this kind of liquidity, with GLP here being one asset that contains all of these different tokens, well, there is no impermanent loss that you are occurring when you are providing liquidity through GLP. Now, how does the GLP supply work? Is there a certain emission every single year? Well, no. When I swap my Ethereum for GLP, or I swap my Bitcoin for GLP, I am minting GLP tokens. And when I sell my GLP tokens back to receive USDC or one of these other tokens, well, I am burning that GLP again. So the supply is essentially just the amount of people that have minted this GLP to provide it as liquidity. We can also see if we go over to buy, let's say I want to buy GLP here on Arbitrum, I can buy GLP with all of these different assets. Let's say that I want to buy, now I'm going extremely high risk, so I'll press $2 worth of GLP. Confirm here, and voila, I have now minted 2.17 GLP tokens, and I am automatically earning this yield here, which I'll dive into in a few minutes. So it's pretty simple. Now, I quickly want to touch a bit more upon how the price works, because I talked about, well, when Ethereum and Bitcoin change in price, so does GLP, but a bit less because, well, it is also 50% stablecoins. Now, another thing that also impacts the price of GLP is the profit and loss of traders on GMX.io. And as I wrote over on my article about GMX, which as mentioned have linked down below, the price of GLP is determined by the total worth of assets making up GLP, so the price of ETH, BTC times the amount of tokens, the P&L of traders on GMX.io, and the supply of GLP tokens as well. And how does the profit and loss of traders impact the price of GLP? Well, right now, this is a screenshot I took yesterday where the price was at around 90 cents. We can see that the total market cap for GLP, so the amount of tokens times the price of these tokens, Ethereum, stablecoin, Bitcoin, all of these things, is $274 million. The supply is 302 GLP tokens. And so if we divide these numbers, well, we get the price. Pretty simple calculation. And then how do these profits and losses impact the price of GLP directly? Well, when a trader loses money, that money goes into the market cap here of GLP. And when traders make money, well, some of the money here from the market cap is being paid out to these traders. Therefore, if traders are making a ton of money overall cumulative, well, then the price of GLP will decrease. However, if it goes the other way and people on average lose money, well, then the price of GLP will increase. How does this look? Well, since the inception of the trading protocol, since November last year, well, the cumulative P&L is negative $36 million. So overall, traders have lost $36 million. Therefore, by holding GLP, you are essentially like the house of a casino, because you are betting against the traders on the platform. And as the saying goes, well, the house always wins. And so far, it has with $36 million. And let's look a bit more about this, because I also wrote a Twitter thread about this recently. And I said, the cumulative P&L is negative $35 million, i.e. traders on GMX are doing quite bad overall. GLP is affected possibly by this, as the market cap is $35 million larger now. Without the P&L, the market cap would be $201 million instead of $236 million. And the price of GLP would only be at around 80 cents instead of 95 cents. Now, I hope this makes somewhat sense. Otherwise, leave me a comment down below in the comment section. Now, let's talk about yield. What kind of yield are we getting? We saw that 30% goes to GMX stakers and 70% goes to GLP holders, as we can see here. And if we go over to earn, we can see that the current yield for GMX staking here is 14%, where around 7.5% is coming from escrow GMX. So this is new GMX tokens entering the circulating supply, and 6.6% comes from Ethereum. And this Ethereum yield of 6.6%, well, that is these 30% fees generated on the platform. So The nominal yield is 14%, but as we are getting diluted by this inflation of 7.5% if you're holding the GMX token, the real yield is actually the ETH APR here of 6.6%. That is the actual yield that you are earning at the moment. How about in terms of GLP? Well, currently the APR is at 29%, and the entirety of this yield is being paid out in the ETH token, so this is coming from the 70% of the swap fees generated here on GMX.io. Therefore, the real yield is 29% on a token that is essentially half stablecoins, 1/4 Ethereum, and 1/4 Bitcoin. So that is actually a really high yield compared to other opportunities in the DeFi space at the moment. And this has been printing high yields because this is coming from sustainable sources, from people just actually enjoying using this protocol. It's not coming from them having to push out a bunch of emissions to incentivize liquidity. In many other liquidity pools, maybe there are great yields for a few weeks or 2 months. For GMX, we've been farming here since April or something. We've been earning so many rewards in Ethereum because this has just been a really great place to farm. And because the price of GLP is also impacted by people losing a bunch of money, this has just been an incredible investment. However, keep in mind, of course, there are risks associated with GLP. If traders suddenly make a bunch of money, well, then the price of GLP will also go down, so keep that in mind. Now, that is probably everything there is to say about GLP. Let's finally talk about GMX. So as we could see, currently the inflation is quite high because they are still incentivizing people to stake their GMX tokens by printing out more of this escrow GMX that can be vested over a period of time. I believe it's over a year, but this will be reduced gradually over the coming months, and by December this will likely, as far as I could tell, be at 0. So there will be no more of these GMX tokens being printed as incentive to stake GMX, but the yield will be purely here from this ETH APR, and therefore the tokenomics are actually looking quite healthy. The supply side is looking good. At the same time, there is actual demand to hold this token because you are buying equity of a protocol that has a real use case. People are using this. It is generating real revenue that is being distributed directly to the token holders. Therefore, I think this token is quite exciting over the longer term. And let's dive more into this with the GMX token. I did some calculations the other day, actually yesterday it was. We can see the token market cap is at around $387 million at the moment. The price is a bit higher today. Yesterday it was $48.5. The circulating supply is 7.9 million tokens. In 1 month, the volume is almost $6 billion from trading and swapping, which is insanely high. Since the inception of GMX, they have generated $59 million in revenue, which is absolutely insane to think about. And what is even more insane to think about is the fact that all of this has been distributed to the holders of GMX and GLP respectively. Now, I did some calculations. The earnings per share is at 7.46, which you can't really use for much, I guess. But this made me able to calculate the PE ratio, which is sitting at 6.5. Now, if you are a stock investor or you know some about that world as well, you know that a PE ratio of 6.5 is quite low. Therefore, do I think GMX is still a valuable investment? Well, I do, yes, especially over a more long-term horizon, because in the short term, there is a lot of unpredictability. There is a lot of events that we can't really predict. Macro is still looking quite bad. There is still really high inflation that could impact the price in a negative way. However, if GMX are able to continually increase in daily users, continue to adopt new users, see this growth of volume, of this fee-generated revenue, and so on, well, more long-term, I think there is a lot of upside for the GMX token. I mean, it's still not even in the top 100 of the largest tokens in terms of market cap. Other tokens like Aave, Uniswap, Synthetics are all much larger than the market cap here of $387 million. So I think there is definitely more upside for the GMX token, not necessarily in the upcoming weeks. That's difficult to say. That's not my specialty. However, more long-term, I think that this is a really interesting investment. I am personally more invested in the GLP token because that is more low risk. However, I think that GMX is also an interesting token as well. One thing to look forward to in terms of roadmap for GMX, I guess you can say, is that they are going to be adding more trading pairs in the future by integrating the Chainlink Arbitrum Oracle, and they will also introduce a new liquidity token called GD, which is something we can look forward to. So this is quite interesting. GMX is definitely doing quite great, despite there being quite a lot of competitors in the decentralized trading space. But I truly think that this is a really interesting platform, and I think the tokens are even more interesting. Now, if you have any questions regarding this protocol, make sure to let me know down below in the comment section. Make sure to like the video if you enjoyed it and found it valuable. Make sure to subscribe to the channel if you haven't already. You can also follow me over on Twitter for additional DeFi content. And with that being said, my name is Thor, and I'll see you guys in the next video. Take care.